what would be 5 or 10 stocks? Only 5 to 10. Let's even say 9. Under 10. Not even a top 10. 9 stocks. If you are new to investing, what would I put in a portfolio? What would be the shares I'd be acquiring first as you are starting your investment accounts, or just getting into the idea of buying shares on a regular basis, and you don't know, what should it be? Should it be an ETF? Should it be a particular company? These are how I pick. This is just, I'm going to do probably a little wrap-up video, or like a more formal, I'll put it in Excel and probably do some balancing or something visual, something to actually put this down into a, kind of a legible plan or something like that. A little portfolio mock up with some of the weights and the dividends that each of these would get, and get the idea of what I'm talking about here. But how would I do this? Okay, start off FinViz screener, right here, FinViz, hit the screener, boom, index. Let's just say Dow Jones. There's only 30, so we're sorted here alphabetically, and you got all these other things you can tap between, right? All the other stats and numbers. Okay, how would I start? We're looking for dividends. Let's say it could be up to 9 stocks, right? But what if we're only going to be like 3 or 4 or 5? When you're starting out, what are the main? What would be? I'll tell you what. This is what I would do. 5 stocks that you buy 1 share of. This is your first goal. 1 goal in the account. Get to 5 different stocks that you hold, 1 share of each. That's what I was thinking for how I was going to lay this out in the Excel and everything. And then the plan from there, how I would say to do it. You just need to get them in your account. I want you seeing those 5 names in there, right? Boom, 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 boom. Let's say it's Apple and Coke and whatever, right? And so you can log into your account and actually see these, and you start seeing the price. Now, when it's your money out there, especially it's in your account. Now you're paying attention. Is Coke $62 today? Was it 61 last week? 59? Now you're in the game. So that's number 1. The second part of this plan, though, is this is where you get those 1 name, 2 names. You just get to the first few is what I have in mind here. But now every time you're gonna put money in, or you get an extra paycheck, bonus, whatever you're gonna get for extra income, or how you're saving your money away. Go into your account. Those are the 5 names. That's the only names I would be adding to. I wouldn't be worried. I wouldn't be watching anything else. I wouldn't be looking for other things. I would be trying, especially when you're new, learning as much as you can about just these couple companies, staying with it, tracking it. On one end, one of the names I'm going to give you is Coke, but there's not a lot of activity there. You don't actually have to pay that much attention. That's a good thing. On an Apple or somebody else, that's, tech moves differently. So there's year over year, there's a lot of different things that can come into play that you want to be paying attention to, and new services or products and things like that in, faster moving companies and things. But for these 5 names, I'm looking at, let's take it and swipe out a few real quick. So number 1, I'm not going to want banks, but let's just deal with size of market cap first. So the biggest to smallest. Apple number 1, Microsoft, Amazon, these are great. Now, because it's the first few names in the account, I really would just want you getting the idea of investments is that they pay you, right? So cash flow, dividends is what we're talking. So we go over here, financials. Here's the dividend payers, right? Of all these, you can see Apple pays very, very little. They have a ton of cash, but they're a high R&D technology company. That's just the way they run it. They do not pay out their profits. They reinvest. They create products and things. Tesla, very similar. A lot of high growth or technology companies, they're not going to pay out cash dividends because they have to invent and invest in new products and technologies to develop and get to market. That's the game for technology. Now, when we look at something like McDonald's, that pays 2.3%, right? Mostly when we talk about McDonald's, they just need to keep selling hamburgers and getting people to come through during the drive-through or the lunch hour drive-throughs and things like that, and incentivize, with just running their business in normal ways. There's not a new hamburger that's really going to change their world. in the same way that a new Apple product or something coming out would. Same thing for Coke, right? It just needs to keep shipping sugared water around the world. People keep drinking sugared water. Good business. So let's say we don't even want to look, just Dow Jones here. Take out any that aren't paying a dividend, but really let's take out anything that's under, we want over 2% for sure. Because if they're not even, like under 2 is like, that's not even, you know, especially, so on the other thing, Apple is so big too, and they're not paying like hardly a dividend, and the company's $3 trillion in size. Like, how much more room can they get? Like, in the world, there's only so much money. So when you're that big, things just move slower, and they're just, you know, the market cap of the company is just the shares. That's how much it costs, like the whole company. What's it worth? Shares outstanding times the share price currently. So for the share price to go up, you're talking about the company just has to have massive increases from its $3 trillion valuation right now, and they've already had that like hockey stick growth with all their products and the iPhone moments over the last 10 years. So they're on that, like, everyone's on the Apple platform ecosystems now, and, you know, for especially our lifetimes, iCloud services, the online, the App Store, all the ways they make revenue through services and just people using all the devices and things like that. Like, that's the play there. Will they have more big products that come out and command a new market dominance in a new market category? You know, it remains to be seen, but that's why I'm filtering out ones that are kind of like, you know, we want to get you in an account that you're excited about that money's coming in, right? Not whether, you know, that you're happy that Apple's maybe releasing a product in another year or something and you're just waiting. And, you know, we want to just get cash coming in, right? Savings, or saving into an investment account that begins paying you. That's a true asset, right? An asset pays you. A liability takes money away from you, right? Like, a liability is your house. House is not an asset. You owe the bank money. If you don't pay them, if you do not pay that money, they take the house back, right? That's not an asset. Coca-Cola shares, that's an asset, right? You got 10 shares, that's worth this amount of money, liquid. In any given day of the week, you can go to the market and turn it back into cash. Along the way of holding it, you're getting paid 4 times a year in dividends every quarter. So that's an asset. That's what we're talking about. Now, what would I be building out? Back to the 5. Let's just, if I were going to bang out some names, the first ones I'm looking at, IBM. Doesn't sound exciting, but I've liked them for the last couple of years because they're going to be in the compute space, the cloud compute space, as far as enterprise and things go, AI, compute level playing, things like that. So, and servers and things like that. Enterprise, you know, they all just use these legacy, like Cisco and who's the other big one I'm thinking? Oracle, right? These are like the backbone internet type companies. Like, these are, Cisco's paying 3%. Now Cisco, you know, I'd have to look in on them because they are like, you know, where's most of their revenue coming from? But then what I also would stay away from, all the financial banks, REITs, and this is just to start off with. And I'd stay away from healthcare and biotech, anything biotech. You know, that's like generally mostly just speculation in terms of those types of companies. So, and they wouldn't be in the Dow that we already screened here. So, and then Dow, DOW, the actual Dow Chemical Company. Now they make all kinds of just everything like compounds and you know, sticky like 3M and things like that type of a company. You know, Dow makes, like, you know, all the things that industrial and commercial type of businesses would need, and, you know, steady business, almost like you know, like the non-exciting stuff here is where we're kind of leaning towards. So Dow, like, real quick, what would the names be? If I'm looking at this list, we got 16 names of Dow 30 component stocks that are paying over 2%. My favorites, when I look at this list: Johnson & Johnson, Home Depot, Coke, CVX, McDonald's, yeah, IBM, Verizon, talked about them yesterday, 3M, and Dow. Now, those are some favorites. What would I select down if I had to get to 5, or maybe, you know, maybe I like the 9 number like I mentioned, but that's where I'd be looking, because when we see, look, you got Dow over a 5% dividend, 3M, nice, solid, stable company, 2.5, nothing crazy, but this is the idea of just like, when you're starting out, my recommendation is, I'd rather you get shares where it's in such a solid place. Coca-Cola, it may not be exciting, but that money is generally going to be there when you come back for it. You're gonna, you want to look, especially when you're new, if you're coming from savings accounts or something where static cash is just sitting, you're just used to seeing your balance there. You get into investments and then you see your balance move around because the price of the shares you hold change all day long. So it's a new thing to get used to. But this is where I'd be starting, because these are the types of names where you never know, but you're generally not going to open up or turn the TV on or see a headline. There's just a massive problem with 3M selling Post-its this year or something, or just for the joke of it. But there's not a lot that's going to change in a Coca-Cola business model that could really impact. Now, you can have like God level events or something happen, a storm or some crazy thing knocking out facilities or plants. Any one of these companies, everything is subject to some type of a risk in general of the unknown unknowns. But when we're talking about where to put money away, and I'm looking at this here, and I'm 6% on this Verizon. Is that not a star? That's so far away for just such a small screening. These are the Dow 30, paying over 2. So we cut the list in half already. We've only got 16 left out of the 30. And among them, look at that, Verizon sitting up there with 6.5%, Dow at 5.23 yields, Chevron 4.4, IBM, these are, and then we just want to select a few and be diversified here. P&G, super solid. Johnson & Johnson and P&G, consumer products companies. So that's where I'd be starting out, and I'm gonna put like a sheet together and really finalize some of these, and ask me if you got any questions on something I pointed out here or covered, or what if you're looking at a certain name in your portfolio, you think, should you swap it out or keep it? Let's talk. But DM me or leave a comment, and I'll talk to you later.